Welcome to Money Isn't Everything. I'm Mary Wisniewski, Cornerstone Advisors Editor-at-Large. Every other Thursday, we bring on a guest that is shaking up financial services in some way, and we get into the why, how, and the possibilities. Already on the show, we've had Ethan Block, who founded Digit, and that started off by rethinking savings. We've also had Frida Leibowitz, who founded Debbie, which is rethinking debt payoff right now. And we've also had Sophia Goldberg, who founded Ansa, and we chatted about digital wallets and growth math. In this episode, I sit down with Michael Broughton, the CEO and founder of Altro, formerly known as Perch Credit. The startup is trying to help people improve their credit scores by linking their subscriptions like Netflix and reporting those payments to the credit bureaus. His work is personal. The problem revealed itself when he struggled to access credit while he was in school. He needed a student loan. Then he realized he was far from alone. In this episode, we get into it all. What building a startup at a hacker house is like, challenges in naming a startup and building credit scores, sorting through good and bad venture capitalists, and sharing audio clips about finance lessons. Here's our conversation. Hey, Michael, how's it going?
Good, Mary. How are you?
I'm doing well. I just want to get right into it with you because I saw that your startup, The Roots, started at a hacker house. And I believe that's where you went viral. And those two things, I'm like visualizing it, but I want to hear it. Like, first of all, what's a hacker house like? And two, let's start there.
It's chaos to start the first.
Okay, I thought maybe.
Imagine a bunch of college students working on an idea, all living together, working together, using their mattresses as, floors for their computers and desktops. It was 12 people in a 3-bedroom apartment.
Wow.
So pure chaos.
And okay, am I remembering this right? Did I read this right? You went viral while you were there?
We did. Okay. Number 3 in the App Store.
Wow.
300,000 downloads. It grew way bigger than we ever thought it would.
And that was because, was it a Jay-Z tweet or something?
Tweet. We had a moment on Instagram actually where people were posting about being the earliest users to this new Jay-Z app. Mm-hmm. And it went viral on Instagram and YouTube, and then it got picked up by a lot of news outlets, and it just kept going. And it was not what we were trying to do. But free virality, you can't be mad at that.
You can't be mad at that. But I mean, talk me through your emotional state. I mean, that had to have been wild. Like, here you are. Sounds like a little bit cramped conditions, but working away on a passion project, and then boom, you're like, "Wow, I'm getting flooded with interest." Yeah,
it was amazing, and the funny part about it is we had this little tracker in Slack where every time we got a new user, it would do a little like noise, and that's what woke us up that morning. Was like at 6 a.m. Just it kept going, and we thought it was broken. So the detective was like in their room trying to figure out the bug, and we're just seeing the ticker just go, and it went for the whole day, and the next day, and the next day, and it just validated that we were onto something.
Well, yeah, let's zoom in on what you're onto, because I know, I imagine, but let me ask it. I imagine you see the credit scoring system as a bit broken, not serving all kinds of people it ought to serve. So, how did you zoom in on wanting to widen access for people hoping to improve their credit scores?
Yeah, it started with myself. I struggled with access to credit, being a young adult, going to USC. I was the first in my family to really go to a major university. Didn't realize that tuition was something you had to pay for. And it just taught me the hard way that credit access doesn't come easy. And I realized that this just wasn't a me problem. It was the millions of people are facing this. And a lot of that early team, that hacker house team, were people who really devoted to that cause. We didn't know what the solution was going to be, but we did know that there was something that needed to be done. And when we went viral, it did nothing but validate that there was more than just the people in a hacker house who believed that this needed to be solved. And that was the genesis of Altro.
Wow. And your original name was Perch.
Yes, we went through a lot of name changes. We started out as Credit Starter. Apparently that was too obvious. So we went to Hatch Credit. Mm-hmm. Then we went to Perch Credit, and now we're Altro.
Which means other in Italian. So it feels like a very significant name change, but maybe it's not. Is it a significant name change?
I'll give you the inside scoop. Funny enough, there's a company in the UK called Perch Loans. and it's owned by an American company called Advance America. And the struggle was that they felt like our names were too similar, and
Wow.
they give out high interest credit, and we are on the credit
Wow.
impact side.
Yeah.
So people were messaging them saying, "I thought this was going to help my credit." People are messaging us saying, "What is this? I thought this was a loan," and they wanted us to delineate, and I think that was good for us as well.
Oh, Michael, that quick aside, there's another Mary Wisniewski reporter. So our identities have been misinterpreted over the years. And I'm like, so I sort of understand this. It's a funny challenge to deal with, but especially yours.
Very
Um,
relatable.
well, I wanted to bring it to like industry wide. Certainly, I know banks and credit unions across the country do want to, underwrite more people. And there's always seemingly this tension of like, how do you pull in another trade line? Is it actually predictive? I believe your startup came before Experian Boost. Is that
Yes.
yes? So now I know that's probably helped even grow more awareness. But I mean, how do you think about which bill payment seems to be the most predictive, or is it a combination of them all? Or how did you start puzzling this together?
Yeah, and that's not just a question that's happening in fintech or with
Hmm.
financial institutions. The government, the bureaus, everyone's trying to understand as we move into a new economy, as people spend different, what really does define someone as creditworthy? And we had this resurgence of bills around rent, around utilities that got turned into its own bucket of alternative data. But when you look at subscriptions, when you're looking at recurring bills, the question still remains on, is this predictive? And that was the battle that we had over the last number of years, is proving that subscription data is data that should be on your credit report. So I agree, like it's a big conversation. We believe very strongly that people show their ability to repay by their ability to pay for their subscriptions.
Hmm.
In the darkest of times, people will pay for their Netflix before their rent. So we thought it was a great tool to help people get credit access, is, the bill they're paying for each month.
And Michael, when someone, attaches their bill payment, recurring bill payment, how much of the history is pulled in, or does the person get to pick? Like, I want 6 months, or how much data is being pulled in?
Yeah, we start looking forward. So you can see it very similar to like a revolving line of credit that's only for your subscriptions.
Hmm.
It's going against your main credit file. So we're hitting 65% of your score. You're building history, you're opening up a new line. It's a different type of line, which is good for your credit portfolio and mix. All the great things. And the fact that people are paying it off each month, and it's very low revolver. It's only $75. Is very unique to market. Back in the day, and back in the day being like a year ago, the bureaus would, they
I mean,
would,
that is back in the day in the world of fintech sometimes.
it really is. Each
Yeah.
week feels like a month. So,
Hmm.
um, you know, the bureaus didn't want to accept anything below $500. They felt like that was not predictive data of someone's credit worthiness. And the argument that we had at Ultra was, if someone's able to prove that they can manage a $75 line, they can manage a $100 line, $200 line, $500 line, but someone needs to grow into that. Because most Americans don't even have $500 in a savings account.
Hmm.
So getting, a windfall of $500 as your first line of credit puts you more prone to making a mistake with your first credit line. So we started $75, and the bureaus actually accept that now. And they didn't accept that, call it a year or two ago.
Wow. This is maybe outside of your work, but maybe it's not. I've been following like, there's a big debate of like buy now, pay later providers, but also like how they're maybe not providing data to the credit bureaus, except I believe Apple is now doing that. But I'm curious how you think about that. Or, would you be able to pull in someone's buy now, pay later data to help improve their credit score?
That also goes into the year ago bucket.
Yeah.
It's been only a year worth of time that buy now, pay later has been required to report to the bureaus actually positive and negative payments. And they're not required to do the positive, just mainly the negative when they don't get their money back. Um, I think BNPL has a lot going on. It's good if you know how to manage your finances. It can be really bad for people who have variable income because they now have to fix their income on a buy now, pay later product.
Hmm.
Um, but that is data that we can look at. It's data that is in your, not only your checkings data, but also now with the bureaus. And it is very predictive in some cases.
Big tangent, but I feel like you're definitely up for it. And that's I was poking around the app, and it showed me two things that I think are really striking because I don't want to get into the branch debate unless you want to, but I saw that your app seems to foster community in interesting ways, including like live events, but also audio clips. And I want to get into both of those things of like how are you using that? What's the frequency, and what do you see? What kind of results do you see from that?
Yeah, we get a lot of our influence from Robinhood. And
Hmm.
when I say that, I mean, before Robinhood, and I like how everything's a history lesson in finance, but
Everything is a history lesson. It's usually showing you don't do this.
no, very true.
Yeah.
And we'll keep the history going. Before Robinhood, stocks was not something that people talked about. It was very personal. We
Hmm.
thought it was only for affluent or wealthy families, and it was hard to get into. And with the resurgence of Robinhood and all these, community-driven stock apps, everyone talks about stocks. My little sister is a sophomore in high school, and she's asking me how can I start investing in stocks, and there's actually solutions for her to do that. And it just completely changed the narrative, and then stuff like GME and all that stuff started happening. And I think that hasn't happened in credit. I think
Hmm.
credit is still something that's very personal. We have a lot of emotions tied to it. We think only wealthy people have good credit. And there's a world where people could openly talk about credit the way that they talk about stocks. No one has developed that yet. So we went very community focused with Altro. We do a lot of in-person events. We talk a lot openly about credit. We bring in celebrities and influential leaders who will tell us their credit score in front of our audience.
Wow.
And it's changed the narrative so much. I would love for you to be in one of these rooms. It's inspiring
Happily.
to see,
Yeah.
how people interact with each other.
Wow, that's like because it reminds me of like Refinery 29 sort of revealed like the money diaries, I believe it's called, where it just shows how people spend their money. And now I see a bunch of different sites doing that sort of thing. But how curious to think about it for the credit score, because you see some surveys come out that say like, oh, Gen Z will share their credit score or their date on the first date. What's your credit score? And I'm like, okay, but really, is that really true? I don't know. But do you think the younger generations are going to push us to be like more open with this kind of information?
I think we will see that world happen, especially with our younger audience. They're just far more receptive to building community. And I mean, call it COVID, call it, iPhones separating us. There's a yearn to build community. And, when we host these events, some people are using Altro not even to use a credit builder, but just to be a part of the community and
Hmm.
just to be able to talk with other people about their finances. And we bring in people who know about starting businesses. We bring in entrepreneurs. We brought in the CEO of FICO actually 2 weeks ago.
Oh wow.
And being able to talk to these people who are normally behind a wall or behind a screen,
Hmm.
it's just very impactful to our community. So,
No, well, what's been like one of the most vibrant topics, or
oh,
that seemed to get people going the most?
I have so many favorites. This is a debate within the company. Is like which is the best one. Um,
It's
I'll
always a
call
debate.
It's always a debate.
What's the All Star?
One of my favorites was we brought in the CEO of the NAACP,
Hmm.
President Johnson. And we talked about the history of just low income communities, Black and Latinx communities, and why there is a struggle to become financially stable.
Hmm.
And I think a lot of our community resonated with that because we put a lot of blame on ourselves whenever we have financial impact or financial struggle. And this is for anybody. But when you realize that there's historical context, it allows you to operate and think differently. I would say my second favorite actually was with William Lansing, the CEO of FICO, because he taught us a lot about how credit is behavioral and
Hmm.
not income based. And a lot of people think that credit is for rich people. And he was like, honestly, the best credit is people who are low to medium income, right? That you don't have to have a lot of cash to have success in credit. And that was
Yeah.
really eye opening.
No, I think that's a really important thing that I do think there's a lot of confusion around that. But yeah, it's just like, are you paying your bills on time? Type of thing. And of course, much more than that too. I'm curious. Okay, I saw you had a big expansion into more states, 47, if I'm remembering this
Yes.
right. Okay, so is that changing like how people are interacting with your app, or what are you seeing from this big? Because it went from like, how many states was it before to the 47? Like dozen or so?
We are in 9 states.
Wow.
And
Okay,
even
so this is
less,
big.
it
This is
was
a
huge.
big expansion. Smells of
Yes.
a bank partner.
Yes. So the power of a bank, it really did change everything for us. When we went viral, we were only in like 2 states.
Hmm. Oh
Um,
wow, that's extra. Like, sorry, I can't help you right now. Yeah.
And we, as loved as we were from East to West Coast, there's only two states that really loved us, and the rest of them were like a wait list.
Mm-hmm.
But now there's no wait list, right? There's only two states that we can't operate in that we should be in soon, which is super exciting. But being in 47 states has empowered us to help people nationwide, and it's been really cool to see the story so far.
Well, I'm and have you seen, I mean, are you seeing like which bills people are attaching? Are they changing up, or is it like the pattern similar?
A lot of patterns, Netflix, Hulu, Spotify are the big three.
Yeah.
But everything's becoming a subscription, so people
Everything
are
is
ready to make
becoming. Yeah, I'm kind of curious because I've been seeing glimpses of how like a bank app is starting to let people see all their subscriptions in it, and then next level would be canceling them. So I'm starting to get like senses of that. Do you ever get users who want to cancel the subscription while they're on your app?
Yes, yes. Even before we were, East to West Coast, a lot of people thought that we were a subscription manager. They were like, "Wow, I have so many subscriptions. How do I get rid of them?"
Yeah.
And I think that there is a world for that. I mean, Truebill, that has turned into Rocket Money, is a great example of a successful business in this space. Of just there's it's so easy to just pile on a $9 subscription month over month and get 20 of those. Um, to the point where everything's a surprise, especially the Apple ones. The Apple ones, they don't even have a name on it; just says Apple.
I know. I haven't sorted all mine, or I haven't done the big reveal, but I'm like, oh, I'm not ready.
Yeah.
Not ready yet. I'm kind of curious about what excites you outside of like that's still within fintech, but is outside of the credit score. What are you zoomed in on as something that you might, think help improve financial services in any which way, in any which category?
It's a little bit of a parlay off of the whole thing about democratizing this conversation around credit. But I think with the adoption of, and I don't want to use a buzzword, but AI,
Hmm.
and the adoption of just like this community feel happening in finance, I think you're going to see this hyper personalization of what your personal finances are. And I think, call it 10, 20 years ago, everything was like, a blog post, or everything was like, hard copy, this is how you do it.
Hmm.
But everyone's financial journey is just so unique, to the point where you can't copy and paste one person's success in finance to somebody else's situation. And I think that hyper personalization will create everyone their own journey of how I get from point A to B to C, to
Hmm.
the point where I can call myself financially affluent. And I think that that's going to happen, and it's going to be really fast, and everyone will have their own, call it, financial account, credit score process, and everything behind it.
Michael, I hope this vision becomes true, because recently on a recent episode we interviewed a banker who remembered, because I was like, oh, that's so wild to think that people had to rely on their paper statements to understand their money. But he's like, oh no, people called their bank like a lot just to get that like transaction after transaction. I'm like, oh, that's even worse, because it's with that weird robot voice.
Oh my gosh. Yeah, no,
Right?
that's rough.
Well, another area I want to talk to you about for the entrepreneurs listening is just like, how do you sort out like quote unquote the good venture capitalists versus the bad, or like the ones that are not going to help you the way you want to be helped?
Yeah, I have a personal blog that I haven't shared about this in my Google Docs, buried. But there is a lot of good VCs and there's a lot of bad VCs. I think that every case is unique. I think when interest rates get low and markets start moving a little bit more freely, you start to see a lot more bad money. And then in markets like this where things are tight, you start to see a lot of good money, but very focused money. That being said, I think for the founders out there, when choosing people to work with, choose people who are really committed to you and the vision much more than the idea.
Hmm.
Uh, Allow yourself room to pivot, to make mistakes, to know that not everything's going to go perfect. And this is a 7 to 10 year commitment that not only you have to take, but your VC has to take as well. I think especially for a lot of founders out there who raised capital in 2020 and 2021, they're finding that their investors now are passive, they're dismissive, they're writing it off. It was just a 2021 mistake. But there are some good VCs who think that this is still a 7 to 10 year journey, and luckily we have a number of those on our cap table.
Yeah. Oh, that's great, because I've been hearing people's apprehensions of like, oh, we're getting into, well, at least the banks, the credit unions are more afraid. They're praising themselves for being boring, and that's of course in response to the bank runs that happened. And, But it does open up that risk of like, oh, if you're not, being creative, if you're not trying to fix what are so many broken processes in the financial services, you're really missing an opportunity that will be realized at some point, I think.
Yes,
Yes.
strongly agree. And I feel like banking itself is just an archaic process.
Hmm.
And, we had so many innovators come in 2020, 2021 who wanted to change that and realize it's not easy to change the banking system. And I think we're at a point now where people are much more conservative in this space, but the innovation is still needed. So,
Yeah, it's still needed. And I have two questions left for you, and I want to leave it open to you too. But one, just to dial back into the pervasiveness of, building your credit score, like the challenges ahead. Were there any surprises to you in building Altro of like, oh, these are all the reasons why someone needs help building their credit score? Was there any particular ones that stand out to you?
yeah, there's a big educational element, of course. People who lived through the financial crisis and even what happened with the dot-com bubble have a very conservative landscape when it comes to credit. Credit is bad, right? And I,
Hmm.
I think that there's an educational element that we have to go through as a company, and that's where a lot of our focus is on teaching people that credit is very empowering. And we use the slogan "financial power for all" because we're giving you financial power by having good credit. And there's that educational element. I would say that's the biggest thing. But other than that, I think that credit is kind of at this point where people are somewhat trying to be dismissive of it,
Hmm.
but it still impacts so many things. We had one user back when we were, in only a couple states, who went through a divorce,
Hmm.
and the divorce actually tanked his credit score. And he was like, "I didn't even think that a divorce could impact my credit." But he was stuck in this, call it a 4-bedroom household because his kids used to be there. Family moved out and he was paying for this, which he used to pay on a dual income by himself. He couldn't afford it. So he was behind on his rent payments. He couldn't afford his rent. He wanted to move and he couldn't get a new apartment without a good credit score.
Hmm.
So he was put in this rabbit hole where he never thought he would be because of a life changing event altering his credit score. And, we helped him. He was able to get a new place. He was able to lower his expenses. And now, he gets to see his kids regularly. It completely changed his life having a good credit score. And he just never correlated the two.
Michael, I'm so glad you brought up this anecdote because I realized I almost missed a very important part of this session where on the show we like to do, that's what you said. And so you were interviewed in Authority magazine, and you said, essentially, without credit, Americans are doomed to a reality in which they cannot build wealth and access the perks that come with it. Sounds like that's still a strong belief for you.
It is. It is. I think credit is empowerment. And it's the same thing as stocks. It's the same thing as, investing in yourself personally. You want to use all the tools that you can to become the best self and version of you. And
Mhm.
although Will Lansing is completely correct, your credit score isn't based off of your income. I think your income can be based off of your credit. It could be in the reverse. And I think that there's a lot of opportunities for America to empower themselves through having great credit and great credit habits. So.
And one last question, but before, any last things you want to mention to listeners and/or how to reach you?
Yes, you can follow me and the company's journey. We're very transparent about what we're building at Mike_Altro. That's ALTRO, or you can follow us at Altro Finance on all socials. And my personal contact it's Mike@altro.io. If you have any questions or thoughts.
Awesome. And last question, which I saw in another podcast that you were asked this too. I was like, damn, this is my final question. And that is, what is the image on your phone's lock screen?
Oh, wow, that's a
I
good
know.
question.
Can you believe you were asked that twice?
It's
It's the only
funny.
standard question I ask.
It's a really good question. I actually only change my lock screen whenever I have a major thing I can't forget.
Oh,
And I'm terrible at taking notes. I'm terrible at tracking myself. But if there's something I really can't forget, I'll change my lock screen. So I change it maybe 5 to 6 times a year. I just changed it.
what do you? What
Um,
do you mean, like someone's birthday, or do you mean like something with a startup, or?
it could be startup, it could be a birthday. It's just something that like I can't miss this. Like a big one is I'll change my lock screen for it because you look at your phone in the morning, you're like, oh yeah, I can't
Yeah.
forget. And I just changed it actually because I just got back from Tokyo last year to a Godzilla micro. I don't know how to explain it, but it's like it's burning a clock and the
Mm-hmm.
clock is like illuminating the time that it actually is on my phone. So
Oh,
it's really cool.
okay. I'm going to take your pro tips because what I do for the important things, I write it on my hand and then like I sweat
Uh,
and then it's like faded. I'm like, I guess that was supposed to be important and maybe it's not.
yeah,
But
the phone
anyway,
screen is a little bit less ink too.
yeah, a little bit blessing too. Well, Michael, thanks so much for being on the show today. Truly a pleasure to have you here.
Thank you, Mary.
Okay, so what I learned most is that the industry still needs to break through a stereotype that high credit scores are only for rich people, because that's not true. And also that tracking sound in the Slack group can really mean you got that many users. 2 weeks from now on Money and Everything, I talk with Lamine Zerard, the founder and CEO of Stellarfi that is rethinking bill payments to give people a shot to build their credit. We get into one of his earlier fintech acts when he worked at the OCC and was building a pot payment startup. And, that had a lot of tension. We also explore all kinds of unusual ways to help a startup grow. See you then.